morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So a lot to cover. We had a massive drop on Friday. I did the weekly wrap up on Friday. So those of you that saw that, you kind of knew how I went into the weekend, saying that, listen, the tolerance by President Trump for a down market is very, very small. And sure enough, he walked things back over the weekend. And that's what we saw here. We saw China backing down, saying that, oh, these export controls on rare earths, not really anything new. There's nothing more dramatic, nothing to worry about. And President Trump also came out and said, hey, listen, there's still a potential for a meeting. We're not going to put these tariffs on just yet. And ultimately, that's what we're seeing this morning. The market's bouncing back. Now, as a technician, I have specific things I'm looking for in terms of trading this bounce. All right. In other words, when you get a massive drop on the charts, essentially off of all-time highs, you get this reversal engulfing candle. It gives you a level to trade against as a technician. In other words, it's a bearish reversal until you take out the high, the all-time high on the market. If we do that, then it goes right back into grind or float up market that we've been seeing for so long. So let's dive into the charts and take a look here. What we're seeing here on the S&P, you can see again, when the S&P futures opened last night at 6 p.m., we were up higher here, and we've basically gone sideways that entire time. Okay, so sideways consolidation as we continue to go here, and we'll keep an eye on that. But ultimately, we're looking at basically gaining back about half of what the markets dropped on Friday. You can see late in the day, in the after hours, the futures had another dump on Friday. But really, when we look at where we closed, the day we closed right here on the S&P, right? So again, we are snapping back about 50% of that drop. Now, what do I mean by talking about that pivot high? So here's the daily S&P chart. And what we can see here is you had this nasty fall on the S&P down 2.71%. Notice how here I write potential breakdown. Okay, now a lot of people would be like, oh, this is a breakdown in the markets. I write potential because you guys know me. Do I go and say, oh, it's a breakout or breakdown the second we close above or below a key level? Or do I say, let's look to see if it's a confirmed breakdown? Because I've been faked out far too many times on these things in my early career, where I had to establish something that really gave me the high probability that it was a real breakdown or a real breakout before I jump on the bandwagon in that direction. And that's what the confirmation signal does that I teach in the Winning Trader series. So yes, we got a break of this trend line, this long-awaited trend line. It came on the 7th hit of the trend line. And that's, again, for those of you that know the methodology, you know that that's essentially a signal there. But in addition, we need to see, does it confirm the breakdown? To confirm, we would have to close below Friday's low without regaining this trend line here on the S&P, which currently sits at around 66.85. If we close above 66.85, the market's been saved, and it goes right back into this wedge pattern right in here. If we stay below on a closing basis, it keeps the door open for it to confirm, but we would still have to close below Friday's low. So really, again, notice how as a technician, and this is something that those of you that are newer are following me, you may be experiencing this, right? Where it's like, oh my goodness, my emotion is kicking in. Big sell-off. Is this the breakdown? Is the bubble bursting? The answer is we don't know yet, but we have specific things that we're going to look for to tell us if that's the case versus just guessing. Guessing does no one any good because we base it off emotion, and emotion ultimately gets in the way of making logical decisions based on probability. Okay, so going back to this daily chart, you can see again, I mean, really amazing daily chart. This trend line going back to October of 2023. Notice how it hits here, it pulls back to the line, bounces back, hits right along here. It really just hovered there. And then we got the bigger breakdown. Now we're bouncing back in the pre-market. We'll be back to around here, but we'll see if we can get back above that level. And that will tell us, again, if it really gets saved or not. Now, a couple other things. If we look at the NASDAQ 100 got the same sort of treatment. It closed sharply lower, down 3.5% on Friday, but it is gapping higher today. Same thing, 50% retrace. So we're going to watch that here and let's watch to see, does it regain this trend line? Now, listen, I've seen many times where a market will go like this, right? And it'll even go all the way up here. But as long as it doesn't regain this trend line, even if it makes a new all-time high, the chart remains very vulnerable for another big leg lower. So just be aware of that. We literally could go up every day this week. As long as we don't recapture this trend line here, then you have to remain a little bit on the cautious side, not jumping back on the full out bull market bandwagon. Okay, so again, keep an eye on this. Again, it's an unconfirmed breakdown, meaning that we haven't seen it confirm the breakdown yet, but it is in the warning zone down here. Semiconductors. I think this is just a remarkable chart, guys. I had this trend line on the chart going back to the March 2020 lows, the COVID lows. That trend line connected perfectly through this high here. And look at how we kissed it, pulled back, choppy sideways, and then got our big down move. Now we are bouncing back here as well. So one of the things we'll be watching is, do we see a hit of the trend line here on the SMH at 350? That would be obviously much higher than where we're trading pre-market, but that's the line to trade against at this point. Now, on the other side of the coin, we know what has been the strongest sector in the markets, the semis, right? I mean, it's obvious. The semis literally have accounted for 75% of the upside in the S&P over the last 2 years. I mean, that's an incredible stat considering there's only a handful of semiconductor companies, but they have been that dominant in the market overall. Now, when we look at the charts, have the semis broken any level that would make us say, oh, it's on watch for a confirmed breakdown? Because it's the strongest sector. Essentially, you could say the market is the semiconductors. Look at this, guys. If we flip back to the chart and we go back to that same low on the S&P, or I should say on the SMH, we take a trend line, we connect it right to this low. Look at this. It hasn't even come down to the line yet. And so what this tells us is that the overall S&P 500 has broken but hasn't confirmed, but the semiconductors have not. Okay, we still, for instance, have to just come down to this level, and then you have to close below it and confirm before the semiconductors have a breakdown. And that's really even more kind of in line with what we're seeing on Nvidia today. Because Nvidia, again, look at this trend line, bull market 2021 right here. This was the bull market high, which is incredible that Nvidia was only at $34 in the bull market high of 2021. We connected to our highest point here, and look at what we tagged. So this hit was great as a sell signal, and we got a massive down move off of that trend line, which is what happens, as we can see. I mean, look, we hit. I mean, in fact, look at this, guys. This is something I'm just noticing here, and it's very cool. Look at how you hit it right here, and look at the size of that red candle. And then if we go over here, look at how you hit the trend line and the size of the red candle. So it just shows you that the trend line is really good at giving us a level to trade off of for a near-term move. But having said that, look at this. We have not taken out and broken this upsloping ascending trend line. Now, we did hit it on Friday, but we know Nvidia is trading at 187.73 cents. So it's back up to here on the charts. And so the point of this is to showcase that while the overall market has shown signs of breaking down, and we've seen this on charts like Royal Caribbean. I mean, look at this breakdown on Royal Caribbean. Look at Home Depot. I mean, Home Depot has collapsed over the last month or so. Look at Carvana even. Carvana has broken down significantly, and this was one of the big runners that took us up from the April lows, but that has broken down. So essentially what I'm telling you is that more and more stocks in the S&P are breaking down, but the semiconductors are still holding strong for now. And it's one of the reasons why, in my opinion, the confirmation signal on the S&P is so important, because again, my guess is when the semis break down, that will be when the S&P confirms the breakdown, and you'll see a lot more downside. Until then, you got to just bide your time. Yes, the markets are slightly bearish after the reversal. We'll watch to see what kind of bounce we get today and if we regain the key wedge on the S&P, but we still have to wait to see if we get that bigger confirmed breakdown. All right. JP Morgan this morning up a little bit. Notice JPM, beautiful trend line right here. And again, it almost came down to support, getting a bounce today. They announced 10 billion investment in stocks directly, in major stocks related to essentially the health of the US, meaning rare earths, militarily, like anything that's AI related, essentially. Now, they announced that they would lend up to 1.5 billion, 1.5 trillion over the next basically the next few years. But notice how these headlines, and I want to point this out, anytime the market has a down day, the next day we hear about a company investing 500 billion goes to OpenAI, or OpenAI invests this much in AMD, and then AMD is giving them this. In this case, we had a big down day on Friday, and today you're getting a headline 1.5 trillion. But again, it's like they're going to lend it. It's not the same, right? It's not a direct investment. It's lending. But my point is, notice the headlines. And this is something I said in the weekly wrap up. I literally said, and you can go back and watch the weekly wrap up. I said, listen, we know President Trump does not like down days in the market. He wants the market to go up forever. But he even said this. Even before the liberation sell-off in his last administration, the last time he was president, he said that essentially the market's well-being and how the market performs directly reflects on the president. And so very clearly, he doesn't like down days. So anytime he does something like tweet, social media post that causes this, it's almost like a guarantee we're going to get some sort of headline the next trading day to try to boost the market back. Now, that will work for a certain amount of time. But even today, I mean, to me, this headline from JPM, okay, so they're going to lend money that they were probably going to lend anyways. No big deal. Like, okay, big deal. All right. In any case, going back to the charts here, Oracle has a big AI week in Las Vegas. There's a big conference there starting today. The stock is up a little bit. The reason I highlight this, folks, is because this AI conference is going to unveil if Oracle is going to tell everyone that there's a ton of business, how the health is of the AI sector. Now, my guess is they will make sure to say it's great. But again, I just wanted to give the heads up that there is this AI conference in Las Vegas going on Monday, I think, through at least Thursday, maybe even Friday. Today, big movers today, Oklo. This is, again, a uranium nuclear play that is a smaller company. It had a big pop on Friday and pulled back. It's gapping up again. I am eyeing this very closely for a potential day trade short above 160. I'll keep an eye on this. It is an incredible mover here to the upside. All right, let's get into gold, guys. Gold is making new all-time highs today. Now, how do we trade this, right? So you had this hit and pierce of this trend line. We never confirmed, and it sold off. Then you've come back up, and you're making a new all-time high today. The question is it going to confirm today? And the answer is no, it can't. It can't confirm today because once it closes below the trend line again, the technique of confirmation restarts. In other words, it went back inside of its home, the parallel, and it has to pop its head back above that line, stay there, and then confirm again. All right, so these are little nuances to the technical analysis that is, I mean, this is hardcore institutional level analysis, but this is stuff that you got to know. So having said that, we want to see, do we close above this level today, this trend line? If we do, okay, that's good. That's step one. Number two is tomorrow or the next days, do we confirm above it? If we do, then this becomes null and void, and we start looking at our next resistance on gold. But gold, amazing, folks. Near 4,100 on this chart of my the cash contracts here on gold, or the CFDs. And ultimately, just incredible, the resilience. Notice how, and I think this is really important, notice how on Friday the market sold off and gold went up. And then today the markets are rallying and gold's going up. Now there's speculation that these stable coin companies are now starting to load gold, which is driving gold demand. Again, I don't have any proof of that. That's just the headlines I'm reading. But again, is this more diversification away from dollars, which is very interesting to think that a stable coin company that basically matches the price of the stable coin to the dollar is now buying gold. But again, as people lose faith in the dollar, as de-dollarization occurs, it makes sense that longer term gold probably does go higher. All right, even if it's due for a correction at this point. All right, Bitcoin. We'll talk about silver in just a minute because silver is making new highs as well. Bitcoin is important here. Okay, so Bitcoin flushed. We had a crypto crash on Friday after hours. It was incredible. Look at some of the charts here, guys. XRP, look at the drop on XRP. Flushed on Friday after hours. It was trading at 280 earlier in the day. In the after hours, it hit 177. So you really saw a massive crypto flush, but look at the technical level that it hit right into this level here. Okay, so that's a big deal right there. And you can see the rebirth here, or the bounce back. Now, the one thing I would say is you have this trend line, the minor resistance. Why isn't this trend line going to be major resistance? Can anyone think about it? And obviously, you guys can't post to me here on this live broadcast, but I just give you a second to think about that. The answer is very simple. You never confirmed the breakdown. Once you confirm a breakdown, so it closed below and it even flushed here, but it still never confirmed a breakdown. So this line is only minor resistance versus major. All right. If it confirmed, this would have been major resistance and you'd actually short into that. Now, listen, you can still short into it technically, but it's just higher risk that it can go back above since it's only minor resistance. But nonetheless, let's keep an eye on it. And this, obviously, this is going to be big resistance, the high end here on XRP. Now, normally I don't cover XRP. We focus mainly on Bitcoin, sometimes ETH. But the idea is if I can teach off of it and teach you guys something, I want to use that chart to be able to teach you guys how to really analyze properly institutional level analysis. Okay, so Bitcoin bouncing here. Notice this trend line. This is my new trend line that I'm following. If we confirm below this, Bitcoin likely goes below 100,000. There's a big level down here just below 100,000. But as of now, we're now kind of hovering in this level. Now, one thing I'm going to watch, and I'm not saying this is forming, but it's just something that my eye picks up. Shoulder, head. Is this forming a shoulder over here? We don't know, right? We don't know yet. But it is just something that I'm going to be very aware of. If we bounce a little bit higher and curl over, do we start to have a head and shoulders formation there on the chart? Again, just something to monitor here. Let me get my trend line back in line there on Bitcoin. So Bitcoin getting a bounce over the weekend, small down day today. But again, as of now, this 100, remember 110, 111,000 was the level I gave you guys as support, and that held beautifully. All right, so number one, I was short Bitcoin going into this. I did cover on that flush on my short. I didn't flip on a long, but I did go long Solana. For those of you that are interested, if you're in my Smart Money crypto service, you made a lot of money on those shorts on Friday. Holy cow, did we make some big scores, 40% gains on some, just incredible on that flush. And then I was able to get a long out on Solana. Didn't get it on Bitcoin, but that's okay, as we've bounced up. And yes, we are in the money on the Solana trade in Smart Money Crypto. All right, so watch this here, guys. We're watching this 111 to 110 level on Bitcoin. Resistance remains around 126. All right, let's flip back to silver. Let's go back to silver here. Silver continuing. It's now pushing above this longer-term trend line. I did reshort a little position in silver today. So again, on I think it was it Friday morning or Thursday, whatever it was, I shorted silver. We covered it for about a 5% gain in Smart Money Commodities. Now it's pushing up again, and I did reshort a small starter position this morning just because, again, it has not confirmed above this. Now, just to be crystal clear on my mid to long term. So short term, I think gold's extended. I love my long-term gold holdings are doing great, but again, I read the charts, right? And so unless we confirm above this level, gold's extended. Same thing with silver. Longer term, I continue to think silver's going to $60 to $62 per ounce in this bull market cycle. So it's not like, oh, in 5 years, in 5 years, it could be at $100 for all I know. I'm just talking about this short-term move on silver. But is silver short-term overbought? Yes. Pull back and then look for that 60 to 62 level on the upside. Maybe it'll go straight there. I guess that's always a possibility, but let's let the charts tell us. If we confirm above this trend line, then at that point, the charts probably are dictating $60 to $62 per ounce. All right. Oil had a major breakdown on Friday, but has not been confirmation yet. So please make sure you monitor for that. So keep that on your radar there. It is bouncing today on that chart of oil. All right. Now, oil again, as long as it does not confirm to the downside, this only is minor resistance, just like what we went over on the other chart, right? On the XRP chart. This is minor resistance, not major yet. If it confirms, the odds start to favor a move down to $55.30 or so. And again, we can watch for that level as a bounce opportunity. All right. Then if we go to natural gas had that great fake out. Remember, closed above dual trend lines. And then again, if you were someone who doesn't abide by the confirmation signal, you'd be like, oh my goodness, natural gas broke out. If those of you that follow what I do, we would say, no, we're not sure on this yet. It could be a fake out. Oh, good thing we thought that and didn't go long or didn't cover any shorts if you had any shorts, right? And down it comes here to the downside. Now, again, natural gas in the short term, if you're a shorter term trader, is going to have support here at $3.32, former pivot high. And again, it's now getting squeezed between here, and we watch to see which way it confirms, right? Does it confirm above, in which case it goes to 420. If it confirms below, it heads back to this parallel down here at around 293 or so. All right. Now, I do have a time for a couple questions, guys. So as always, I love getting to questions if I have enough time late in the session. First question, I'd love to see you do technical analysis on Palantir. Absolutely. Let's take a look at the charts and flip over to Palantir, PLTR. Let's see what we have on that chart. So Palantir had a big drop. Look at how you have these big falls and then bounces. Big fall on Friday on the daily chart, and now we're bouncing again. Now, overall, notice this. We broke below. So this chart is vulnerable. Okay, now listen, it's basically back to its all-time highs, right? But the fact that it's below this trend line means that the chart is vulnerable. Now, yes, it's bouncing today, but be very careful here. This is a chart that, again, to me, when I see this, the fact that it broke this trend line, this is on borrowed time, right? So it's yes, it could even go a little bit higher, but at some point it's going to start to correct. So just be a little bit careful on that Palantir chart. Where would be your first technical level of support? Well, first of all, we would obviously go back to this area here. This was what was the big level to the downside, basically around 150 to 148. Any move down into that level, high pivot, broke out, retraced support, came up, came down, hits multiple times, and goes back up. So this level is your kind of line in the sand. If we confirm below it, you're going to get a bigger correction to about this former high around 124, maybe gap fill at 120. But as long, again, if we hold it, then it could keep bouncing off this technical 148 level. All right, next question is about wheat. Oh, I love talking about wheat here. So let's take a look at the wheat chart. We'll look at the cash contract here. So the cash contract continues to hover here in the near term. You can see I have resistance levels right up here. Now, wheat remains, and just like corn, guys, let me get rid of that. Just like corn, wheat is basically at lows. In fact, remember, I don't know how many of you guys have heard, but President Trump is basically talking about essentially bailing out farmers because the tariffs have hurt the farmers so bad that you could see the prices of wheat, corn, soybeans. I mean, China used to be buying a ton of soybeans. They're not buying almost any soybeans anymore. So all of these factors are contributing to the hardships of the farmers, and we're looking at a bailout. Now, the reason I'm actually bullish on wheat, I'm long wheat in my commodity service, I'm long corn in my commodity service, not soybeans at this point, but I am eyeing it. The reason is because I'm a believer that eventually we do get into a recession. And the beauty of the grains is that during recessions, grains essentially are recession proof. What do I mean by that? Well, listen, everyone's got to eat, and they usually go towards cheaper alternatives. So while live cattle is trading basically at all-time highs, which is beef, right? Beef and filet mignons and all that, stuff. You have the grains at the lows because people are choosing and saying, "Oh, well, I'm making money in the market. Let me go with the filet mignon." Now, if you get into a point where people are eating home more during a recession, what are they going to be eating? Probably pasta. Pasta's made out of grains, right? And so, to me at least, if we head towards a recession at these levels, the grains make a lot of sense to me. And that's, again, I would be bullish on them. The charts also reflect that being at the low end and at technical support. All right, guys. So very cool stuff there. That's a great question on wheat. I love being able to go into that economic side of the grains overall and being somewhat recession proof. But nonetheless, I have to get to my trading room. Thank you guys so much for tuning in to the game plan today. I will be doing trading the close. Drew is out, so tune in at 3:55 today for my wrap up for the markets today. There'll be a lot to cover. Let's see if anything confirms where the bounces take us. Do the markets hold these things? I'll see you at 3:55 right here on verifiedinvesting.com. Have a great one, guys. Thanks again. Take care.